Chapters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Rich. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. Thanks so much for tuning in. Tommy O'Brien coming to you live from TFNN Thursday trading, and we got markets with some selling accelerating to lows at about noon Eastern time. We bounced for the last 3 hours, and we got 60 minutes left to go in trading. We got markets in the red. S&P's negative by 0.7%, trading at 67.77. NASDAQ 100, we're off by 1.3%. You were off 2% at some of the lows out there. Trading at 25,400 with 200 points off those lows. Dow off by about 0.6% right now. Trading at 47,156, and you have the Russell. Off by 1.4%. A little bit of a rollover from where we were at about 230. Bitcoin's been under pressure lately, and that continues today. Check out Bitcoin from 127,000 a month ago today, folks, October 6th. Okay, and we're challenging 100,000 for the third day in a row. You were down there on Tuesday, you were down there yesterday, and today we almost hit that price level as well. 100,610 was the low on Bitcoin, off by 2.2%. Ethereum off by 3.3%, 33.46. Crude basically flat at $59.53. We take a look at that crude volatility. Pressure to the downside this morning, all the way to 58.83. We've bounced a bit, but we had some selling with the whole rest of the market this morning. Crude traded lower this morning. You had gold trading lower. They were selling everything this morning, right? From about 8:30 until the lows of noon. They did. They sold it all. Gold trading from 4,025 down to 39.80. Now, I say they sold it all. They even sold the dollar. So you don't always sell the dollar and you sell the commodities the dollar is priced in, right? But that's what was happening. We had lower yield, a weaker dollar, and they were selling gold, selling crude, selling markets this morning. You jump over to yields. As I mentioned at the top of the hour update, one of the biggest moves out there. You got higher price, lower yield. The 10-year is negative by 6 basis points. We're down to 4.09 on the 10-year, and you're up by 15 ticks to 112.26 right now on that 10-year. All right, and we'll kick it off with jobs. The most October cuts in over 20 years. So, in my opinion, folks, some of the selling that we have going on today is a little bit of the volatility of yesterday's tariff deal. Was very surprised to hear that policy, in all likelihood, facing a lot of pushback from the Supreme Court, from my very little understanding of legal arguments. But what I do understand is people and the questions. And, they were giving both sides good questions, but there was no market reaction today. And I think part of this is that. All right. And the president's going to have a lot more of options if it does get overturned as unconstitutional, those IEEPA tariffs. But there'll be a short period of risk off, right? And that's the way I look at it. Not that it's going to deteriorate everything. There'll be other avenues. And I imagine that the other trading partners, okay, they can make those same type of deals potentially with a Congress backing, okay? And how does that work, right? Or different types of pet tariffs or different mechanisms besides IEEPA. And I imagine those other partners are going to try and cement similar deals and not hold that against the president and re-flare up tensions, right? But there's going to be some short-term volatility if that headline hits the tape, folks, that the tariffs are ruled unconstitutional. And boy, I don't even know how they'll unwind them. I think for ease, if they just went proactively, right? I read an article coming into the tariff concerns that it was going to take in some situations 10 months to get a refund right now, even when you were dealing with just sometimes what will happen, folks, there'll be an erroneous tariff or it'll be too much. You can appeal it. And in those situations, there's already backlogs because of what's going on with the government. So it would just take almost years to refund that money. Maybe they just push it forward if that's where they were leaning. And they were talking about it. But that's part of the selling, in my opinion. Right out of the gate this morning. Jobs was in focus, okay? But right out of the gate, man. And that was some fierce selling to the downside. And it didn't stop until about 25,300 in the NASDAQ. S&Ps on volume, it was strong all the way until about 11:30. Okay, we've dried up since then. Markets have bounced a bit, but you have not seen the selling. We've just had you have not seen the buying. We've just had some of that selling dry up. We'll see if it comes back in the last 45 minutes. The VIX, you do get a spike, but all things considered, hey, we're just back to where we were yesterday. You're just back to where we were on Tuesday, and we're not that far off from where we were on Monday as well. VIX with an 18 handle at 1896 right now. Some of the equities moving today. Snapchat up by double digits. Big numbers for Snapchat, up by 11%. $500 million buyback. On the flip side of that, Health Beauty, down by 36%. Talking about it this morning. For their forecast for their annual sales, $1.55 billion and maybe a little bit more. Hailey Bieber's line alone is going to do $300 million. Their entire business is 20% of Hailey Bieber's line of cosmetics is Elf Beauty. Okay, and this is a $5 billion company, and some of those cosmetic brands, right, of influencers, just famous people in general, huge followings, Kardashians to name a few. But boy, that one struck me, man, and they have some issues. And add that into the mix, right? Because what if she goes somewhere else? What if she's controlling 20% of what they do? But boy, this thing down from 221 when you made a double top last year, and that's the monthly volume, folks. No, that's the week. Okay, I thought it was monthly for a second. Still going to blow away everything. Check out the monthly volume, though. Already we've done 24 million shares. Last month you did 31. It's November 6th. So you had Eli Lilly and Novo in the Oval Office today, and unfortunately the VP of Novo had some type of medical procedure, and I'm not sure what ended up happening. Hopefully it was all right. I don't know if they put anything out other beyond that, but let's see. Eli Lilly, nonetheless, up by 1.5, and so, they got a deal that comes out with the obesity drugs, talking about lowering the cost. Under the agreements, the monthly out-of-pocket costs of popular injections and the upcoming pills, $50 to $350 is the number, depending on the dosage, insurance coverage a patient has. And what I didn't know, I was reading this earlier, all right? It seems like there's 3 groups. Maybe they'll rephrase it. Maybe I'm going to check out after the break. And it's based off BMI and other conditions. Nonetheless, Eli Lilly up by 1.5% today, and the market likes that on a day when we got right across the board. NASDAQ 100 off by 360 right now. We'll come back. We'll take a look at those Magnificent 7, folks. You got Tesla in focus as they're looking to approve their pay package for Mr. Elon Musk. And we'll take a look at Airbnb. All right, as they get their numbers, we'll check out Airbnb tonight and see what we got going on. Airbnb, a little bit of a bid. Check it out for our man Elo in the den. Down by 0.2%, trading at 122. We're coming back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. NASDAQ 100 off by 1.4% right now. And you jump around, okay, in terms of where we are in this market right now. And I would say there's some angst on those tariffs, folks, because the market's not quite sure how to process the gravity, I think, of them getting potentially overturned. And, you know, the Supreme Court's given them a lot of difference, but the power of taxation, it seemed like they were pretty skeptical of handing that power over to the president. And one of the points they made was some of the things that that they had overturned yesterday, last year, okay, on Biden, was like, wait a second, so you're telling me all this stuff, he could have had all this power if he just said, AIPA foreign facing? So this is going to be a headwind for the market. And I think you're seeing it at play because, yeah, we had some jobs this morning. Okay, we had some earnings on the front, but we had some selling. That's what was going on. All right, we jump around to some of the airlines. Yeah, so flights in focus. Delta down by about 0.4% right now. And you jump over to it as the headline, and we're going to see it, and it's only going to get worse from here. It's a real deal. You know, I'm flying actually myself in a week to Boston to visit some relatives for the weekend. We'll see what happens. Thankfully, it's not Thanksgiving. But yeah, 10% at 40 airports. And it's only going to get bigger from there. It's going to name the locations on Thursday after briefing those affected. 44,360 flights a day. So they're going to nix about 4,400 flights. All three major New York City airports, Atlanta, Chicago, LA, Orlando, San Francisco. Maybe Tampa can sneak by. No, there's nobody's getting out of Dodge, folks. It's still a difficult situation, but you get to see the real world impact. Who's going to budge? We're going to find out. We're pressure points. We're hitting pressure points. You know, I would caution you, okay? And we're going to take a look at Airbnb in a moment. But, you know, this is the front page of Bloomberg, okay? And I love Bloomberg, okay? Stocks slide as job jitters spark Treasury rally, Okay, they're telling you exactly what's going on, that it's about a job jitter in this market. U.S. firms announced the most job cuts in October in over 20 years. Okay, I went over this article this morning. Folks, comparing October in 2025 versus October in a random year, okay, yes, generally you see when those months spiked, right? In market situations that were not good, okay? You go back to 2001, you go back to 2008, those are some spikes, right? You didn't even have it happen in COVID, though, right? We were already out of it. COVID hit in March, and by October rolled around, we were fine. Meanwhile, the market pulled back by some insane amount of percentage, but it never happened in October, okay? Be careful of headlines like this that assign why the market is moving, when I would take issue with the fact that, yes, okay, that's the data. The Bloomberg is saying, hey, look at this data, look what's happening because of this data. And yes, it mattered. All right. But that is the backdrop of everything else going on in this market in terms of valuations and the volatility around the tariffs. It's a monumental unknown that's going to get unleashed on this market. I think it's going to happen, and I bet you they're planning for it, so everything will be okay with the White House. But you better believe we're going to have some short-term volatility with the markets pushing that price level. And I think you're seeing it today. I don't think it's about that jobs report. You know, it factors in, but not to that same degree. All right. Jump around to some other equities that are moving today. Papa John's up by 4.7% on their numbers, 43.21 right now. We talked about Snapchat giving back a lot of those gains, but still up by 12.4%. So Penn Entertainment, they end their deal with ESPN. Talk about a give back, man. Down by 9% after accelerating higher up to 18.82. Oof. And ESPN announces a new deal with DraftKings. DraftKings, they give back the gains as well. This gambling market is real worried, folks. All these stocks are just trading lower. Okay? Jump over to Disney, down by 0.6%. And DraftKings. You check out this chart. Yeah, testing those lows. Watch out on DraftKings, folks. You break below here, watch out. And look at the volume you have on the selling. All right, let's take a look at Airbnb. Boy, you talk about a chop, right? We're at this 120 area. That's been support back here in August at their last earnings. We're down by 0.4%. We take a look at the Analyze tab. Okay, so they're pricing in about a $10 move on earnings. $9.65 is what the market's pricing in. We jump over to the options market. And yeah, so you want action. You're looking at about $5 for a put or a call at the money. So about a $10 move for their earnings after the bell tonight. Let's take a look at this thing on a daily. Yeah, you got some buying out here, and that was, if you recall, every single equity had huge volume on that September 19th, which was options expiration Friday in September. Massive volume on the close. Every equity. Gold equities, no matter what you were talking about, they all had massive equity volume on the close. And that's really the only bid out there on a daily basis. Let's put it on a weekly, go a little further back. That's 2023. A lot has changed since then. Boy, you drive down here in August of 2024 to 110. You make it all the way back up at the beginning of the year to 164. You do it with some volume, but then you get the sell-off. And again, the time you had some volume was September 15th, and that's some buying. You know, if you're getting into it with earnings, you're going to have some volatility and some risk after close. Okay, but what I'll say is, you know, you put a line in the sand here. 120 is the line in the sand. I wouldn't give myself much below that. You could put yourself right below the lows you had from an earnings ago, but the problem is you get into it tonight, you could gap lower. This thing's been pushing the lows that we've been at since their last earnings. Let's see what we're talking about. Talking about a $74 billion company right now. Not exactly a lot of strength on that weekly. You got that September 15th. We backed in a bit. Yeah, I don't know. I'd stand clear. Just not quite downtown, do you think, huh? Yeah. A lot of pressure, man. Look at that earnings last time, right? Nothing's really convinced you since 90 days ago. So I wouldn't be buying it. And yeah, there's downward pressure for sure. So we'll see after the bell. About a $10 move priced in. Airbnb, negative by 0.4% at 122. S&P's off 46. We're coming back with Tim Ward, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the NASDAQ 100 off by 392 points. A little bit of selling picking up with about 29 minutes left to go. We'll see where the final hour of the trading day brings us as, selling coming back in. We're hitting lows that we haven't hit since about 2 o'clock right now in that market. Off by 400 in the NASDAQ again. S&P is off by 56. You get the Dow off by 287 and the Russell off by 36. And some great questions in the den. Double broad. Great. I'm trying to wrap my brain around it, right? So you say, okay, help me understand. I'm going to share it because it's a great question. Tariffs are overturned, right? That's bad because the market's under the assumption they're permanent. You get a big change even though the money is going back to the people that paid them. Number one, the market hates uncertainty, okay? You know what the market loves? Pricing in every risk perfectly and then using those probabilities to make the most. The last thing they want is having no freaking idea what's going to happen, right? Then they're shooting from wherever everybody else is, and Wall Street doesn't like that. So that's part of it. The second part of it is that, it's where we go from there. Do they give the money back? I don't know. And even the justices, we're not quite sure. Maybe we just go forward. We will find out. But and yes, maybe they give it money back, and maybe in the short term it goes up from there, right? Because there's less taxes. That money goes back into the economy. Wrap your head around it because I think it's going to play out. All right, folks, right now we're going to jump over to our man Tim Ord. You can reach Tim at his website, folks, ord-oracle.com. I got it right up here. He's got his past results on that website. Check that out, ord-oracle.com. And don't forget, folks, a couple of great webinars under the services tab as well. Tim Ord, good afternoon. How are you?
Good. Thanks for having me on again. So everybody's kind of a little bearish here. Let's kind of look at the market, what's going on.
Please.
We got the charts up, right?
I'm going to pull them. Yes, we do, Tim. We're in action. I got them up. We're ready. Let's rock and roll.
All right. Anyhow, let me grab a pen here. Anyhow, we're into this support area right here. Previous support areas are back here. There was one back here you can see, but every time you go back, the reason why that's a support area, you had trend readings 1.16, 1.17. There's one at 1.46. Anyhow, you had a group of trend readings all in this vicinity right here, from here to here. And so that trend readings above 1.2 is an area where you get panic. And panic only forms in one place, and that is bottoms. So if you get a group of them, all of them basically in the same price range, that becomes a support area. And I did this chart earlier today. And if you notice, we're in that zone right now. We're kind of right a little bit above it right now, but we went back into that region, and that's the support area. So this area should be support, and it's the reason why I got a big arrow running up, going up from this area. So once the panic area develops, you go back into it, and you should get panic. And we did get panic. We didn't really get it today so far, but we had yesterday. We had a 1.29 on the trend, or actually yesterday was 1.12, the day before 1.29. So the only trend readings you get around 1.2 or higher are in support areas, and support areas are where panic areas form. So anyhow, we had panic areas right above that area. We got into the region now. And so this should be a support area in a nutshell. Previous times this happened, right back here, we didn't quite get in it on that day, but we ran into it, then bounced off. Today we got into it. So anyhow, the uptrend's still intact. We're pulled back down to support. Mark was up 5 days in a row going into last Wednesday, I think it was. And normally you get 5 days in a row. The market will make a higher high within 5 days, 82% of the time. Well, this 5 day period is getting stretched out because we've been going down for about 6 days. Well, today is actually the 6th day from the previous high. So that indicator still works, but it's taking more days for it to rally out. So once you get 5 days up in a row, there's a high probability you're going to hit higher highs. Instead of 5 days, you might take 6 days. But anyhow, the whole thing's bullish. You're back into a panic area, so you're finding support. So let's kind of look at the bigger trend, what's going on. If you notice here, this is the highest volume day. This is a monthly chart, and you hit a new high. So far this month we have not touched a new high, and markets don't make highs on high volume. They always go up and get tested at least once, and the test is the key. If the market can make through that previous high, and if the volume falls back 10% or more on the test of a previous high, chances are that previous high is going to be resistance, and that's when you start getting a top. If you can tell back in here, this region, if you compare the volumes actually went down there, and that was a higher high, and you test the previous high on a lighter volume. That's how you got the correction back going into the April low of this year. And so now we're going up. So far we're making higher highs and higher volume. That's the definition of an uptrend. So I expect this high here to be broken at some point, either this month or next month. So I'm thinking we're probably making a low today. If not, well, actually not today. A lot of these lows come on Fridays, so I think if it's going to be a low, it's probably going to be tomorrow. Or we go back down and test today's low, don't know. But we're in a support area, and so I'm long the market. Got along a little bit too quick. I should have probably waited for been a little bit more patient, I guess. But anyhow, I'm long the market, and I'm seeing. Everything I'm seeing is looking pretty good. So we can move on.
Yeah, let's do it.
You want to go to the gold market here?
Let's go to gold, please.
All right. This is a bullish percent index bullish percent index for the gold miners index / GDX. So it's the ratio. This is a weekly time frame. And I put an RSI on it, and it's RSI 10, not 14. And anytime it gets below 25, we're at 20 right now. If you go back there, we're at 20.18 when I made this chart. And so it's a weekly time frame. So it gets you in the vicinity of the bottom. And I marked, this chart is a huge chart, goes back to the first signal came in 2010. So you don't get a lot of signals. You get, eyeballing here, you get about one a year. We got one right now. And, all right, I'll hold.
Perfect. We hear the music, folks. We got gold right now, just under 4,000. We're going to come back and talk some gold with Tim Ward. We have the S&P's negative by 56, NASDAQ 100 off by 404. We're coming back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's off by 60, NASDAQ 100 off by 423. We got a little bit of selling today. We're on the line with our man Tim Ord. We talk to Tim every Tuesday and Thursday at 30 past the hour, folks. And don't forget, you can reach him at ord-oracle.com. And we archive every interview we do, folks. So this interview, if you missed the beginning of it, it's right on our YouTube channel. We archive all those interviews, and we're talking a little bit of gold. All right, Tim, please continue.
All right. So anyhow, this is the bullish percent index for the gold miners index. In other words, it measures the percent of stocks that are on point and figure buy signals. That's what the bullish percent index measures. Then I do a /GDX, and it works really well. It doesn't give a lot of signals, but the signals that it does give seem to be, well, actually it's 92% accurate. The only failure it had was back in 2013. All the other ones work pretty well, and we're on one right now. To get a signal, the RSI, the 10-period RSI on the weekly time frame, not the daily, so it takes a bigger swath of time. When the RSI gets below 25, we're at 20 right now. You're looking for an intermediate term rally. And how big a rally, some are really big, some are not. I think at a minimum we get back to the last high, which on GDX comes in around 84. That would be the minimum. We could flip sideways because we're probably due for a consolidation of a bigger degree. But anyhow, at a minimum, we should get back to the previous high of 84. So we're in a low area right now. So that's on the short term. So I'm thinking 84 will probably be reached, I don't know, next couple of months or whatever. It's not really a short-term signal, but, it could reach it in the next couple of weeks. I don't know. But anyhow, we're at a low area according to this indicator, and it's worked pretty well in the past. I want to look at the real big picture of what's going on, and I did a lot of different XAU, NDX. I had some other short-term indicators, but farthest I could go back was, I think that's 1982. So it goes back far as I could. But anyhow, the top window is the monthly XAU. The middle window is the XAU to NDX, in other words, NASDAQ. This is a monthly chart, and it appears to have a 12-year cycle. So I put an RSI with it. So in uptrends, in other words, when this ratio is in an uptrend, the RSI in general stays above 50. When the ratio is in a downtrend, in general, the RSI stays below 50. And so anyhow, from looks like about 1989 to 2000, in general, this ratio went down. In other words, gold stocks were underperforming the NASDAQ stocks. And so you should be in the NASDAQ when the ratio is going higher, like from 2000 to 2012. In general, this ratio went higher. RSI in general stayed above 50. And that said, the XAU outperformed the NASDAQ. And from 2012 to 2024, another 12-year cycle, this ratio went down for 12 years. In other words, saying NDX outperformed the XAU. Now, back in mid-2024, we finally got above, the ratio got above 50, so showing that the XEU now is outperforming the NASDAQ. So the previous times had basically a 12-year cycle. So the 12-year cycle really started in 2024. That's when really gold stocks really started to outperform. So you add 12 years to that, you come out with 2036, 12 years from now. So we'll just have to see how that works out. But gold stocks, a lot of monthly charts have been signaled. We're due for a consolidation right now. And we may be at the bottom of that consolidation. We may flip sideways here for several months. But in general, I'm expecting the gold stocks probably to outperform for all the way into 2036. So we'll see how that works out. But on a bigger time frames, as long as this RSI right here stays above 50 in general, then the gold stocks most likely will outperform the NASDAQ stocks, and that could happen over the next 12 years. So, it's kind of a big degree of what's going on. So on a bigger time frame, these gold stocks could be rocking right along. What to invest in? Here's some kind of signals I use. This is a monthly. I showed this chart in the past. It's updated to the current time frame, I think. It's RIO.TO is the symbol. In other words, it gave a buy signal. What's on here is a monthly Bollinger Band, and that's pretty much it. You run everything off the Bollinger Band. And you have to have a sign of strength. In other words, big volume going through the mid-Bollinger Band. Okay, if you notice back here, that did it right there. There's a mid-Bollinger Band right here. So it closed above the mid-Bollinger Band, and that's highest monthly volume, probably going back at least close to a year. We had the same thing happen. Looks like probably this is December right here. And it flipped through the Bollinger Band on huge volume, mid-Bollinger Band. That gave the buy signal. And it has actually extremely good rally from 2024, and currently we're still doing good. Yeah, that's the big buy signals on the monthly time frames. So what's currently on a buy signal? So a lot of gold stocks have really took off to the upside. There's probably going to be a wave of the ones that are up 200, 300, 400%. They may take a rest, consolidate, and they may go back down and find other ones. Well, here's a monthly, this is a Walter Lee. I think I brought that up last time. Walter Lane, rather, Resources. It's a gold stock, closed above the mid-Bollinger Band. If you can see how high this volume is compared going back to, looks like about a couple of years. So that's a gigantic swing through the mid-Bollinger Band, sign of strength on huge volume. It's been backed off a little bit. Ideally, you like to see it stay above the mid-Bollinger Band. This one didn't. I own it. I don't see any big problem because this is a sign of strength off of a bottom, and sometimes they hold a Bollinger Band, sometimes they don't. But a lot of times, ones that do are usually a little bit stronger. You've been consolidating here. This is the second month of consolidation, but look what the volume does. It just drops out. So this is probably a initiation of an upswing. You got a consolidation on lighter volume, and what should happen next is another rise up. How high? It's hard to say. It could be weeks, could be years before it goes. Here's another one. This is West Haven Corp. I think I brought it up. Same idea. It's a monthly chart. I wanted to show you the last signal it got. This is basically back in 2017. Gave a buy. You can't see the volume very well, but that was a big increase in volume back then. Jumped above the mid-Bollinger Band, fell back a little bit, and finally got going. The buy signal somewhere around probably 10 cents or thereabouts went to $1. So that's a 10-timer in a 2-year period. Now you got bigger volume. If you can see, you close above the mid-Bollinger Band right there. So anyhow, this is the one to look at.
I appreciate the breakdown. Gold's been so strong, man, since September, as in it's at 4,000 when the dollar strengthened from 96 to almost 100 since that September area when it was at like 3,700. So I'm with you. It's been strong, even with the pullback. Tim, thanks so much, folks. Don't remember, check him out at his website, ORD- oracle.com, oracle.com, or under TFNN, those services as well. Tim, have a great weekend. We'll talk to you Tuesday, man.
All right. Thanks a lot.
Thanks a lot. Take care.
All right.
On a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. NASDAQ off by 480, S&P's off by 70, and yeah, you even got the CIA out there saying, hey, we got risks in a government shutdown. All right, you have the TSA, they're down there, but yeah, you're talking about the CIA. For some reason, oh, come on, catch up. My computer's a little slow right now. I had the article up. Hopefully you don't lose me, Al, but we got markets sliding right now. NASDAQ approaching 500 yet again, 5 minutes to go until that closing bell, and the selling's off to the races, and yeah, there it is. There it is. CIA deputy warns a lengthy shutdown poses national security risks. I mean, just even at the airport and the TSA, right? The more strains we'll see on national security, the longer it goes. And it stretches beyond TSA, of course. That's not what they're talking about. But yeah. The White House Budget Office requires federal agencies to publish their contingency plans for a shutdown, but intelligence agencies have kept their secret, as disclosing them could reveal details on manpower and activities. Nonetheless, we march on. We'll see if we get some headway. I know we're seeing some headlines out there potentially. And yeah, the market would probably greet that with relief. And maybe that's what they're going to try to get done, because I'm sure with the S&Ps off by 75, NASDAQ off by 490, tariffs look like they're in trouble, and they do, folks. All right, now you jump over to Kalshi. Here's what I'll say about this, okay? Number one, yeah, you better believe they're selling it off. We're at 25% right now. But as I talked about it this morning, this market is so light compared to anything we're dealing with in finance, okay? The entire market shows a $703,000 volume. Could you imagine if you could use Kalshi to distort the market? Now, I heard the arguments and everybody did, and I think the tariffs are in trouble. But that is not a lot of money, folks. And if you go down to the order book, which you can look at within here, okay, the market, you're talking about a bid ask. Some are supported by $300, $600, $2,000, $2,000. Okay, it's a thin market on Kalshi for some of those odds, so be careful relying on them with the authority that some people are giving them. Markets, we're right at session lows. NASDAQ 100 off by 485. S&P's off by 73. As I mentioned, we got some earnings tonight, Airbnb. Folks, thanks so much for tuning in. I couldn't appreciate it more, spending your afternoon with me. Have a great